Guys, welcome back to the game plan. You're one trade away from changing your life. Today, huge show for you guys. Going to keep it in under 3-4 minutes. Make sure to text us any question, 844-722-9743. We can get you on the show. You can ask us any question, or you could just text us and we'll answer it on this show. We had a lot of people talk about GameStop. We did go over GameStop. Very bullish, $9 billion in cash in Bitcoin, $9 billion market cap. You want to watch GameStop, but that's not the purpose of today's show. What we're watching right now is very important. Okay, you have a war that's outbreaking. You have a Federal Reserve who's not cutting rates because they're looking at data. They don't know how tariffs are going to impact inflation. They're very concerned about inflation. Okay, they want to get that inflation down to the area that they had their target on. But with crude oil flying 8% on Friday due to this war, and the 10-year Treasury yields now flying another 1%, how does the price of crude oil impact the decisions from the Federal Reserve? You want to watch crude oil this week. If you're a stock trader, you want to watch crude oil because it's going to help you understand if we're heading towards a risk-off environment or a risk-on environment. Now, things can get pretty crazy with crude oil if Iran decides to block, the water that's responsible for about 20% of the oil on Earth. Okay, that can cause crude oil to fly like never before. We saw this during the Ukraine and Russia war with wheat. We saw wheat just go absolutely through the roof. Oil can do the similar price, and higher oil prices is obviously not what the Federal Reserve wants to see, because that's going to impact a lot of margins, especially when you have to ship stuff and you have to pay for the oil. It's just, guys, the whole transportation system is just going to elevate the inflation if oil prices remain high. So you want to watch crude oil and you want to watch the 10-year Treasury yield. If we see a higher price in crude oil and we see a higher price in the Treasury, okay, we want to have a lower position size to the long side because we could potentially be gearing up for a risk-off environment. I'm not saying that's going to happen. I'm just saying we want to really minimize our risk in case it does happen. We constantly have to be trading like we never need to make $1 in our life. We only want to trade like we're retired. Okay, because when you have that mindset, you're able to really identify risk from no bias. Okay, you don't need to make money. You need to protect money. Okay, there's going to be a lot of opportunity to make money if the market does crash. But we don't need to race into a long position if we see higher risk setups with the 10-year Treasury yield inching up higher and crude oil inching up higher. That's going to cause some panic in the market, especially associated with some of these fearful headlines that the United States could get involved in this war. Like our channel, subscribe to us, guys. We're on Instagram, Game Plan Wall Street. We're on YouTube. We're on X. Text us any question you want, 844-722-9743. You're one trade away from changing your life, guys. Ciao.